Okay, everyone. Well, thanks for taking some time to listen to us today. Today, we've got Sue Haviland here. Sue is a reverse mortgage consultant at I Reverse Home Loans, and they've got offices in the Baltimore area as well as Florida. She holds a designation of Certified Reverse Mortgage Professional, and she's also authored a book, Senior Solutions: The Secrets to Maintaining Independence and Choice for Life. And she also hosts Senior Spotlight Radio, and this presents a lot of discussions on topics that affect senior citizens. On top of all that, if that's not enough, she's also recently been appointed to the Advisory Board on Aging here in Harford County, Maryland, where we're located. So, Sue, thanks for taking time to chat with us today.
Kirk, first of all, thanks very much for having me here today for this discussion. I really look forward to sharing what I consider to be the good news about reverse mortgages and how they can help folks.
Okay, great. So I guess we'll just jump right into it. The big thing is there's lots of opinions with what's going on out there with reverse mortgages and a lot of confusion. Can you just give our listeners an overview of what a reverse mortgage is?
Absolutely, and that's a great place to start. And you are right. There are a lot of what we like to call myths surrounding the reverse mortgage, and it really is in its most basic definition, a very simple program. It is a reverse mortgage, or a HECM, which stands for Home Equity Conversion Mortgage, is a specially designed loan that allows homeowners age 62 and over, and that's key, 62 and over. It allows them to access a portion of their home's equity. The borrowers can use those proceeds for practically any purpose. So, Kirk, I like to say there are almost as many uses for the reverse mortgage as there are borrowers. And unlike a regular or forward mortgage, and I think those of us in the reverse mortgage, I think in the reverse mortgage space, I think we made up the term forward mortgage. But unlike a regular mortgage, there are no monthly mortgage payments that are required. That is key. The borrower can take a reverse mortgage and never be obligated to make a monthly payment. Now, of course, the borrower is always responsible for keeping current on things like real estate taxes, homeowners insurance, any condo or homeowners association fees, and the home must be the primary residence for the duration of the loan.
Okay, all right. So that gives us a pretty good overview of what the product is. How do you usually have? I mean, how do you see your clients using the product? You hear all kinds of things out there, but what do you see and what do you usually recommend?
Well, it really depends on you raise a great point here, Kirk. It really depends on what the borrower is looking for. We take the time and we really have a great deal of discussion, not only with the borrower, but also perhaps with family members, other professionals such as yourself, trying to ascertain what the long-term goals are for that borrower. And reverse mortgages continue to be a popular option for what I call the savvy informed senior, folks who maybe just want to supplement their cash flow. Maybe they'll come to me and say, Sue, if we have a few $100s additional cash flow per month, we're in good shape. Everything's good. Some borrowers would like to eliminate their debt. Maybe that mortgage payment is just dragging things down and preventing them from having the retirement that they'd really like to have. Or perhaps there are other debts that they'd like to get rid of, such as high interest credit cards or other types of consumer debt. Perhaps they want to stay in the home, but they maybe have some difficulties. So perhaps hiring an in home care agency to come in and help with some of those daily chores and things around the house is a good idea. And many clients now, we're seeing, which I really like this idea, are using the reverse mortgage as a planning tool. Perhaps using that line of credit option that allows them to leave that line of credit established. Maybe it's just as a safety net for unexpected expenses that may come down the road.
Okay, so rather than somebody taking line of credit, a traditional line of credit where they're going to have to pay back, they could utilize the HECM and then only if they needed it they'd access it. Is that kind of how you're seeing it?
Exactly right. And there you go, using that term heck'em. See, I've got you using our jargon already. Yeah, that the line of credit, once again, it's great as a planning tool. And there's also another feature which I really like about the line of credit, and that is its growth feature. So for someone who doesn't have an immediate need for the funds, they might establish this line of credit within the reverse mortgage, and then that line of credit will grow. Just to give perhaps just a really basic example, and I'm just tossing out some numbers here. Let's say that someone starts with a line of credit of approximately $100,000. A year later, that line of credit might be 103. And then a year later, it might be 107. And then it might be 111. You can see how year after year, the borrower can access more of their equity using that line of credit option.
Okay, great. One thing, being in the financial planning industry, there's a lot of planners and other folks that have always said reverse mortgages are kind of the tool of last resort. I mean, what do you say to folks who call it a tool of last resort?
That may have been that's another great question, Kirk, and that may have been the opinion of many out there of the reverse mortgage. I'll say the reverse mortgage of the past. The reverse mortgage in today's environment is anything but the tool of last resort. It's really, once again, a great option for folks who are informed and are who are making a plan for their retirement. We're not waiting for there to be a crisis situation. We're really using some forward thinking here. Things like getting rid of that mortgage payment, establishing that line of credit as an additional safety net. And also, the reverse mortgage brings with it some really important safety nets, which I like to discuss at length with my clients to make sure that they understand just how safe of a product this is for the senior borrower. For example, there's a mandatory session with an independent HUD approved counseling agency. No one gets around that. You must do a counseling session with this independent agency. The borrower selects who they would like to speak with. And it is really an additional layer of education and allows the borrower to ask any questions that they might have. So that's one thing that I really like. I think it's an excellent piece. In addition, the reverse mortgage is a non recourse loan, which provides that the borrower or their heirs can never be obligated to repay more than the sales price of the home at the time the home is sold. So no matter how high the reverse mortgage balance gets, the borrower or their estate is only obligated to repay up to the value of that home. That's another great safety net and a really good piece that is built into today's reverse mortgage.
Okay, great. That's been really helpful. So Sue, I've got on here the screen a way for people can contact you. You can see, everybody can see her email, Sue at reversemortgagesuccess.com. And then her phone number is up here as well, 443-677-0389. So if you have any questions or if you want more information, I'm sure Sue would be more than happy to chat with you or shoot you an email. But outside that, Sue, thanks so much for coming in and educating our folks today. And do you have anything else you want to say?
Thanks very much for having me on today, Kirk. It's been a pleasure to be with you.
Okay. So we appreciate you listening in. If you have any questions, again, you can contact Sue or you can give me a call or email. Put that information out there as well. Just let me know and I'd be happy to help you out. So thanks for tuning in.